so it's going to be a great time for our football lovers. But it's going to be good stuff, man. So what's the whole theme here? If you noticed, if you didn't see my message on Friday, we had the lowest amount of volume the entire year. So the S&P printed, and the Equities for that matter, printed the lowest volume of the entire year yesterday on a nice little grind up session into yet another high, and then of course we put another high in the summit. So the market is grinding up and up and up on literally ridiculously low volume. And it's because right now it's driven by pure options data, which tells us there is zero fear in the market at the moment. There's zero fear because there's zero protection for fear. There are no puts on the books whatsoever, zeros or otherwise. There's nothing on there. The VIX keeps plummeting now into the 14s. So that's just telling us is that the market right now is willing to go higher and higher, higher. Possibly, there's a couple of theories around that. One, because the market was over-positioned for fear in the beginning of the year. One, and another because is that the market is very resilient right now. Everything the market's thrown out of the past 4 years, from COVID to Russia to rate cuts to rate hikes to and everything in between, the market's kind of laughed at it and just kept on going. That's like that scene in Nightmare on Elm Street where Freddy Krueger cuts off all his fingers. He's like, I just keep on ticking. That's what the market's doing. Great movie, by the way. If you're not an 80s baby, you do better. Right now we have call selling, put buying. 47 million in calls sold, 196 million puts purchased. What's up, YouTube? It sounds a little funky because I'm on the wrong microphone. So let me switch over to the proper microphone. There we go. Now we're on the right microphone. What's up, Dave? Mojo, how you doing? June, Kyle, good morning. Hope you had a fantastic weekend. I spent my weekend building a chicken coop. My live account still is not active yet. I'm starting to get a little aggravated, not going to lie. But that's not TakeProfitTrader's fault. That's TradeAvate's fault. Which, unfortunately, when you go live, your only option is to trade on TradeAvate, unfortunately. Or NinjaTrader. You could do NinjaTrader, but I hate NinjaTrader. So, but unfortunately, it takes them that long. It's been now 9 days since they've moved my account into the live, and I am unable to trade off of it. Nightmare on Elm Street was Johnny Depp's first movie. Yeah, definitely. Definitely. It's pretty good. I watched Nightmare on Elm Street when I was 9 and refused to go to sleep for weeks. Yeah. I was the same way with the movie It. My dad made me watch that movie when I was like 4. And then he proceeded to put clowns in my bedroom while I slept. So I think those warning signs there, he probably wasn't the best dad early on. It has scarred me for life. It was great. It was great. What's up, Dan? How you doing? Much improved. What's up, Michael Johnson? The Golden Pipes are back. Hello. What's up, Dova? My man. Massive, how you doing? I've got the hero indicator. I need to make this full screen, don't I? There you go. There's full screen. So here's full screen. The green line is calls. The blue line is puts. We have Bookmap in the top right. 64.25, 64.50 up top. Today we have virtually no news. Nothing going on. Spot Gamma says the way the vols are implied at the moment is that today is going to be a snoozer. We have no catalyst virtually. We have very, very little volatility built into the options chain. Did I hear you can't stream Bookmap? I can, because I'm an affiliate. I'm paid by Bookmap to stream their services. Very little, but it's still paid. But if you look on YouTube, there's tons of Bookmap streams that stream Bookmap all day long that are not affiliated. They're bootleg and they're copyright. So Bookmap is trying their hardest to shut all those down, but unfortunately YouTube makes it very difficult to shut those streams down. Shouldn't be that difficult, but it is, unfortunately. My dad had me watch Jaws when I was 6. Nice. Terminator at 4 years old. Great movie. I remember watching Terminator 2 in theater back in the 90s when I was a young kid. That was great. What's up, Rainy Days? How you doing? Hopefully today is not a rainy day. We've got 64.28. It appears that the S&P wants to come on and down and grab that at the moment. Again, today is probably going to be my least trading day of the week if I had to guess. That's what I'm planning on right now. NASDAQ bouncing back up. ES is selling back off with yet another divergence. You feel like every day is divergence between the S&P and NASDAQ. It came out in 92, weren't you like 5? I was. Yeah, my dad at least took me to see Terminator with my cousins and my brother. Next podcast, there were signs we didn't have the best parents. Yeah. Yeah, tell me about it. Tell me about it. My father let me watch Full Metal Jacket when I was around 6 years old. I am in a world of poop. It's a great movie. Saving Private Ryan in theaters 13. Man, that was a great movie. I remember my grandfather, who was captured. He was actually have his Western Union letter of him being prisoner of war. He was captured in the Battle of the Bulge. Probably wasn't a great idea to let him watch that movie because he was like bawling his eyes out the whole time. I remember that. No bueno. No bueno. I remember that when I was a kid too. We're getting deep today on the OM stream. Anybody else want to discuss PTSD? It's great stuff. Just kidding. Just kidding. All right, so the S&P is 6430. If you look at the SPY, we are below S1. Overall, very tight range. Very tight range. Well, you see, it all started when I was born. S&P is right about here, right around S1. 637. We just closed the gap from the overnight gap up, the settlement open gap. So right here, we have a skew down to 64.25. If you want to short down to that, that's fine. It's only 3-4 points. And then, of course, my overall theme, I'll tell you what I told the Tier 2 peeps, because it's pretty much common. My theme this week is to buy the dip. I'm sure that makes some of you all aggravated. But to buy the dip, because what do we not have to tell me otherwise? If you go down to the daily chart, we do not have volume. Without volume, I cannot, in good faith, consider this any kind of distribution or any kind of markdown. However, it's not to say we won't top wick and absolutely smoke lower this week. We could. It's very possible. One of these weeks it's going to happen. Whether it's this week or next week, one of these weeks we're going to have a massive red week. But I'm just saying, until I have a technical definition of some sort of selling, I have to look at this market as a buy the dip market. Every time we have a red candle, I'm going to buy the dip into a major support. And then if I lose, so be it. That's fine. Then I'll start shorting. Also, if you're looking for a final top tick, which some people are, you need to have a morning green and an afternoon red. That's how you get those top ticks. Morning or afternoon reds that hold without bottom wicking repeatedly show signs that we are transitioning from either a markup into distribution or distribution into markdown. Somewhere in that thing. And it's all in the price action we use to confirm which one. Most likely this is going to be markup into distribution because we are in absolutely the blow off top phase of the market here. And the blow off top leads to the selling climax because a blow off top leads to long chasers. It leads to FOMO. It leads to a lot of stuff. One of which equals distribution. Once the blow off top phase ends, that's the last phase of the markup, and then you go into distribution. When we are absolutely in the blow off top here. I watched Jaws when I was 4. My dad cured the fear. I actually love sharks. It was Unsolved Mysteries. Oh yeah. I remember Unsolved Arachnophobia keeps me up at night. Nice. Nice. All right, 64-27-75. You know what my worst horror movie ever is? Office Space. Office Space. That movie scared me crazy. I was like, that's what I have to look forward to when I'm an adult? Being in an office all day? I'd rather be eaten by sharks. I'd rather Freddy Krueger stab me in my face in my sleep than sit in a cubicle all day. All right, going lower, 64.26. We have liquidity down. Coming on down. What we got? Bring me a higher love. Ooh. ES coming down, NASDAQ coming down. If we could take this out, I think we might be able to get NASDAQ to fill the gap lower. But we have to see how these things correlate, because once again, we have another divergence with NASDAQ outperforming the S&P right here. I let my 5-year-old watch Jurassic Park, and her favorite thing is a T-Rex pushing a car off the cliff and eating them. I love it. What would you do if you had $1 million? 2 streams at the same time. Idiocracy was prophetic. Yeah, tell me about it. Gold futures. Yep, we need to take a look at gold futures. Fantastic stuff. Gold's been on a bit of a downtrend the past few days. Overnight at the settlement open, they hit this target here. I would love to long the 32.90. I'm going to keep an eye on gold until I hit 32.90, and I'm going to long the crap out of it. Oil has not really moved now for a couple of sessions. Once again, yet another on Friday, bounce off of my zone. I did not play it. Silver, rejection off of the upper resistance here, coming on down. Look out for 37.705. Once these triggers start to become a little more actionable, I'll start posting them in the signals channel. If you look at platinum here, they're up in the resistance range. Still hasn't moved off from June 30th. So about a month now we've been in the selling range that I plotted. RTY is not looking as bullish. Haven't taken out a new all-time high yet. Still rejecting, underperforming. I tweeted this last week. If you want to short something, if you have the itch to short, if you are a bear, then for the love of Jesus, go over to RTY and short RTY. Forget about shorting NASDAQ and the S&P until it's obviously selling. Go over to RTY, short RTY. It's a beautiful product to short. The S&P and NASDAQ, not so much. Not so much. I feel like if I had $1 million, I can make something like that happen. AMD looks like a short soon. Nice. The S&P continues to drip a little bit. NASDAQ is bottom wicking to hold the open. Hold the open. RTY plummeting. Dow plummeting. Silver plummeting. Gold plummeting. Everything plummeting except the NASDAQ. We have liquidity 64.20, 64.40. Obviously a very tight open. Obviously not anything all that crazy we want to go for here. IC's launched. Beautiful. So, tomorrow we have only slightly more catalysts. We have CB consumer confidence and jolts at the top of the hour. We have Atlanta Fed. We have the 7-year bond auction in the afternoon. Retail inventories at 8:30. So not a lot going on. Wednesday is the kickoff of volatility for the week. We have ADP non-farm employment change at 8:15. Now that's not non-farm payroll. That's the precursor to non-farm payroll. We have GDP as well. We have pending home sales at 10 o'clock. Crude oil at 10:30, and then of course FOMC big dog event at 2 p.m. Let's get ready to rumble. Thursday, initial jobless claims, core PCE, Chicago PMI, and that is it. And of course Friday we have non-farm payroll. Non-farm payroll. NASDAQ still bottom wicking. ES still bottom wicking. No trades today. Market's been open for 7 minutes. Nope, no trades yet. No trades yet. NASDAQ to retest pre-market highs would be nice. Yep. Looking like it's about to come back up. I usually don't trade the first 15 minutes. So I watch, I learn, I navigate, and then after about the first few minutes, I start to place my strategy, which right now, buy the dip. That's everything. Buy the dip. Continue to buy the dip, period. Let's see. Gold's coming down. Oil is starting to top wick, and that is it. Buy the dip. That's all I can offer you. It's been treating me very, very well the past 3 weeks. That's literally all I've done. I think I've taken 2 shorts in 3 weeks. Less than 25 trades the entire month of July so far. It's fantastic. It's been the best trading month of the year for me in terms of execution and patience. And most of them of which is longs. Just buy the dip. Buy every single bottom wick. Buy every single volume influx. Buy every single red candle. That's all I can offer you. That's right. That's a lot of catch-up, Trippy Mike. Look, NASDAQ just broke out. Didn't trade it, but there's another 60-point bounce on NASDAQ. Buy every single dip that you can. $296, $628 right here. The sound, oh yeah. Yeah, people don't want to hear it, man. People don't want to hear it. People get mad when you say buy the dip when we're, 5 months extended to new all-time highs. But unfortunately, that's what the market's giving us. Until it breaks, man. That's what you got to do. I am doing the drawing today for the Tier 2 drawing and the Tier 1 drawing in the account giveaway channels. And then, of course, I think somebody said they were going to sign up for Tier 2, and I offered them a free 150K account, but I never got that. So I guess that one's still up for grabs. NASDAQ still going. We just tapped into the liquidity sweep off of 850 in top wick. RTY is still sliding lower. Platinum still getting slammed here. Watch out for 1428 possible little area, but that's a small trade there. Obviously, a lot of prop firms don't trade platinum, so. Buy the dip, baby. Buy the dip. Gold. CL still top wicking into resistance. We have call selling, put buying. 756 million in puts, 460 million of calls sold. So people are taking profits off of the overnight pepperoni and cheese. Still going down on the S&P. NASDAQ, beautiful top wick. If SPY, SPX can rotate and follow NASDAQ, that would be nice. Yeah, but we have a whole bunch of, we have a whole bunch of call selling here. They are selling the crap out of some calls. And now we have skew down to 6420 on the S&P. So right now, the bulls got their work cut out for them. The bears are taking control of the tape and the order book at the moment. So I'd play down to 6420 or so and go from there. I'm personally not focusing on NASDAQ at the moment. Busy week here. Yeah, definitely. Where are you looking for the options call and puts data? Spot Gamma. If you look on the YouTube stream there, the bottom left yellow, or I'm sorry, the white box, that is the options chain data. So I'll see if I can make it a wee bit bigger. There you go. Oh my gosh. Kennedy, love it. Look at all that skew right there. Deep order book here at 6424. I have the strong urge to short out of Chipotle. Why Chipotle? What's wrong with you? What do they do to you? Platinum's still getting wrecked. NASDAQ just put on a high volume top wick at 945. That got you sick? Uh-oh. So first VPA possibility on NASDAQ is a top wick at 945. Now that does meet the two criteria. The third criteria, we have to close under 23,500. And then that NASDAQ's going to go down. But I do think ES is going to come down to 64.20, 64.21. Now that's only 4 or 5 points, so don't get too excited. But that is what we're looking at the moment. Me close, my dear. 3 entry rules. Close below the wick or body. The close. The close is the most important part. That's where the order book is closed. So the first criteria is volume. The first and most important criteria is volume. The second one is wick. The third one is the close. Very important. We have an off-brand, I guess it's not off-brand, it's a place called Dos Bros. That's it's the same exact restaurant as Chipotle and Qdoba and all those type. You get, rice bowls and burritos and stuff. It's interesting though, because you go in there and the individuals that own it, let's put it this way, it's obviously Mexican food, Mexican style food. But I can't understand a word that any of them say, and they're not Spanish speaking people. And so it's very difficult to go in there because they don't speak English. It's like, dude, I just want a rice bowl. Trump just made a statement about tariffs. Yeah, I know he did yesterday. Did he make more today? I thought it needed to close below a prior low. 23.5 would be the prior close. It's got to be below the prior close. Yeah. We're going to be setting a tariff for the rest of the world, and that's what they have to pay. Yeah. We'll see. I'm tired of the tariff news. A bunch of nonsense. Let's just focus on something different. Let's get the tariff news locked in, and let's focus on, banning the IRS. That's what I want. I'm tired of this crap. How long is he going to drag out? It's like he's going to be in his final week as presidency talking about freaking tariffs. Like, dude, just move on to something else. Get it done. Get it done. What do we got? This explains a lot of my confusion. There you go. Beautiful. Good questions. Let's see. We have almost $1 billion in puts, and then they're starting to buy back some of the calls here, but overall a very slow day. If I had to tell you something, today probably should be the most tepid you need to be with your trades of the week. So the volatility is low. The VIX is in the 14s. We have no headlines. Unless Trump says something crazy with some tariffs, we're probably in for a pretty snoozer of a day. We have FOMC and earnings all this week. So there's going to be a lot shaking and baking. Today's probably going to be a little slow. We have another top wick here on NASDAQ. If I could get down a little bit. Now, there is something about the 3 criteria. I am going to be releasing a YouTube video this week about the 3 criteria. A very in-depth, go-to video about the 3 criteria system. So be ready for it. However, the one thing y'all need to realize is that the 3 criteria is not supposed to get you. You don't have to wait for all 3 criteria to take a trade. It's just a measure of confidence. If you want the fullest confident position, the lowest risk trade, then you need to wait for all 3 criteria to trade. If you want just a signal of a possible bounce, then you can go with 1 or 2 criteria and then enter. It's just you have to mitigate your risk if you do that. The risk, it's like a sliding measure of risk. If you only want to trade off 1 criteria, that's fine, but you're going to take on more risk. That's all it is. So it's really about yourself on measuring risk and probabilities. So, and of course, time frames. Which time frame are you trading on? Waiting for a 3 criteria bounce on like the hourly chart is like massive confidence. Waiting for a 1 criteria trade on the 5-minute is very low confidence, but it'll net you quick profits if you're right. Can't wait for that video. Yes, sir. Yes, sir. Man, this is tight. Come on now. What else we got? X's are mixed red and green. Utilities are down red. Most of tech is green, including Tesla. Google's the only one that's red. Gold is plummeting. In my opinion, it's going to be a hard chance to get this to bounce off this again because we've already bounced off of it. So what I would like, 32.90-ish, plus or minus $1 or $2. I would like 32.90 to get inside another scalp long position. And then maybe it turns into a V recovery. I don't know. But I'm going to attempt a long 32.90 on gold. And if it breaks that, then we have an even bigger level to target, which will provide even more profits down to 32.60. Easy peasy lemon squeezy. It's all a waiting game here. It's all a waiting game. Or you can short down to it if you so choose. But this is what's causing me to trade so little the past month and have such a high hit rate, because I'm waiting for high confidence pivots. I'm not touching anything until I see a high confidence pivot be touched. NASDAQ, another top wick. McGabagoo with cheese. Yeah. It's all about probabilities. That's right. High probability of success means lower reward usually. If you want a front run position, there's less probability of success, but a higher possible reward. Exactly. Anytime you take on more risk, there's a higher chance of reward. Or not chance, a higher possibility of reward. So anytime you take on risk, you're going to get more reward and vice versa. You take on less risk, less reward. That's the way life works, baby. That's the way life works. One day the top will be in. I feel like I need to tweet that. One day the top will be in. Yeah. What the crap? What's going on out there? With NASDAQ top wicking, but on the hour, it's bottom wicking. How do you determine your bias? It depends what I want to do. If you want to take a quick scalp, then see what's going on in the 5 or 15. If you're looking for the overall theme of the day, then 4-hour, hourly, daily chart stuff is what you want to do. And if it's telling you two different things, then maybe it's a good time not to trade that product. So it's really what's like for me. What I like to do is link up the macro with the small, because if I want to short, let's say, then this is not the time for me to look to short the rips. I want to buy the dips. That's what I've been saying every day. I want to buy every dip that I can because the daily chart is showing relentless below off top bullish action. And the more people who want to short kick and scream, the higher this market's going to go. That's just the way the order flow works. When the market becomes FOMO-ish and people want to try to short the top, that is more tackling fuel to go higher until the sellers capitulate. And when the sellers capitulate, we have a massive green day or two. Massive. Get everyone holy crapping. And then it's time to go down. So if you want to short right now, short the rips, find something different. RTY is a fantastic product to short. If you are a bear or someone who cannot shake a bear thesis, then please, for the love of God, go to RTY and short RTY. Not the NASDAQ. Man, what a boring day this is. Buy the dip, of course. NASDAQ is going. Trump says Powell will be leaving very soon. I'll miss him. This guy's crazy. Making money trading is supposed to be boring. Yes, it is. Yes, it is. Long on gold. Nice. 3,300 snag my TP. Only half orders filled. Trade of 8 slippage. Maybe. Gold hit 3,300. Beautiful. Beautiful. RTY looks like it's going to give out again. Nasdaq still holding the top here. This is the pivot from 8:30 or so. ES is still bouncing. They just had liquidity down to 64.10. We just hit the top of the hour too. We just had a massive put spike. Put spike to 1.3 billion. Calls are still in the negative territory here. So the option chain is no longer supportive of a bull run, at least for today's session. And they're putting on skew. Look at this. Look at the skew. 64.10, 63.96. Interesting. Muy interesante. Anyone else taking any more payouts? I want to hear your experience. I want to hear your success. Your success sustains me. Still trying to get funded? Keep it up, baby. You can do it. You can do it. You can do it. I got a payout this week. Keep it up, baby. Love it. Guys, killing it as always. Killing it as always. I'm not laughing at you, bro. I am and always in awe, baby. Killing it. Love it. Heading to day 5 again on my top set being green and blue it last night. Hey, try TakeProfitTrader, baby. It's daily payouts. You don't have to wait 5 days. TPT. Payout requested this morning. I love it, Bandit. Beautiful, buddy. I do real well with Top. I'm about to try your TPT with your code. What platforms? They offer all of them. You could do Tradeovate or you could do Rhythmic, any of the Rhythmic platforms. So, TPT is really the match, but if you have an issue, their support is horrible. It takes days to get a response. Yeah, they do. That's why, you know, I want to go about doing that a little bit differently. So if you all do have issues with TPT, DM me, or I might even create a TPT support channel where I could email the affiliate department, because they respond on the daily. I can email it directly to the affiliate department and see if that gives us something. See if I could be a little bit more of an asset in that way. I don't know if they will, but you know, we could try. I will when I win that account. Yeah, buddy. Yeah, buddy. If we already have accounts that were created before you affiliate, does that count? Yeah, 100%. Yeah, you're still my peeps. You're still my peeps. Yeah, buddy. SPY, SPX trying to pump up for that overnight high. It looks like it. NASDAQ is still carrying the market here. Haven't taken a trade yet, but I want to. My hand's starting to sweat. I got something going on, homie. $64.32. All right, so ES just filled the top side liquidity, the major stuff, and they've got some down here. So I'm very curious how this is going to play out. It's a very tight day, obviously. Things are slow, but do I break my rule? I don't know. My hands are sweating from that quad espresso and nicotine. Dude, are you shaking? I'm going to cheap it out. This is a little quick drop and buy quick play. Nice. Stick to your rules. Oh, 100%, yeah. Stick to your rules. So I need at least one criteria to get me going here. But I like the fact there's liquidity lower here. But things are super slow here. I'm not in any hurry. I got all the time in the world, baby. When y'all use Fib, do you use it on a full day, including overnight session, or do you use an intraday session? Anything that's price action. If you're using volume-based price action combined with the Fib, then you've got to use what you have available, which is all the price action. That's me personally. I drink coffee all day. I have 4 espresso in the AM, then drip all day. Nice. I snort beta-alanine every hour on the hour. Keeps my heart rate up. Would you consider 34 SR flip on the ES 5 minute? Yes, I would. 100%. So we have bottom wick, top wick. So right here at 34 on the S&P, and that's all we got, obviously, because we're at all-time highs, but that is definitely an SR flip on the 5. It's not a big one, but it is one. NASDAQ, still going higher. NASDAQ wants high volume, always coming on the 15. Yep. Liquidity up to 64.40 on the ES. What's gold doing here? Gold's still not being able to hold. The Dow's rocketing back up. RTY is still top wicking. Oil 67.56 back and forth. TRTX is about to come up and fill my gap. I already did fill the gap. Beautiful. God. Amazing. So the dividends are starting to come back up. I love it. If you're unaware of TRTX, TRTX is right now my favorite REIT. This is one of the few holdovers from coronavirus in my portfolio. All the coronavirus style plays. This is one of the few that have survived. Because my cost basis is so low, and they give such an amazing dividend. This is one of the highest ratio of dividends to stock price in all of the REITs out there. They started out pre-coronavirus paying $44 cents a share. Now back then they were $21, $22 a share. Now They've cut down to $8.50. They actually got down to $2 a share, and it's because they suspended their dividend in coronavirus. Now they're back up to $24 a share. They were 21 cent. I'm sorry, not 24 cents a share. They were paying 21 cents a share. Now they're back up to 24. So they're building back up. They're building back better here. And once we get over, once we finally get out of this $9 range, maybe they can start climbing back up into the 20 range again. And then my cost basis will be ridiculous. And if they can get that dividend back up to 40-something cents, God, it's amazing. O is a good one too. Yeah. O is a good one too. TRTX, correct. Tango Romeo Tango X-Ray. It's my favorite holdover. Can you read off Hero? I'm going to have a hard time reading it. Yeah, sure. Let's take a look at Hero. Right now, $1.4 billion in puts purchased. $132 million in calls. So it aggressively negative delta today with a skew lower. So my theme today is we are in fact going to roll a little bit, not much, but we got to be patient with it. Got to be patient with it. I haven't taken a single trade yet today. I read Spot Gamma's founder's notes for the morning, the weekly notes, and even they said that the implied vol is so low that they're expecting a snoozer today. So I came in with the mindset is that this market is going to have to pry a trade from my cold dead hands, because I hate trading slow choppy crap. I don't do well with slow choppy. SPY about to show a 3 criteria for a drop. Almost. Almost. Did you ever hear from Gaz? Yeah, he chimed in on Friday. He said he's taking it easy during the summertime. How big is your TPT buffer? I took one payout from a 75 so far to cover OM annual membership value and the eval cost, 3 evals I had. Plan to take another one to cover TV subscription. I want to leave some in the wallet to pay for Quan Tower. Beautiful. I love it. Beautiful. What I intend to do, because I've got a live account with about, with a pretty decent 5-figure balance. My goal is to not touch that balance at all. I want to generate $400 a day and then withdraw $400 every single day. That's my goal. I could do more than that probably, but my goal is to show you all that you can trade conservatively, less frequently, and still pull out life-changing money. $400 a day is life-changing money for 99% of America. Heck, it's life-changing money for me, and I have like 10 different sources of income because all it is $400 a day every single week, every single month. Would you consider showing your trade logs for that account too on the $400 a day? Well, we'll go through the setups, yeah. I do intend, what I'd like to do is record trades and place those with analysis too. $400 a day is equivalent to making $50 an hour on a typical 8-hour shift for some perspective. There you go. Where do you see? Where do you see what? Do you see? Come on. I totally understand thesis is execution that I struggle with. The only thing I can really recommend for execution is pull the position sizing way, way, way back and just trade where you see confidence and just see what happens. Start to build the habit of taking executions when you see it, because doing nothing is great. We talk about that all the time. But missing opportunity is also not good. So there's a fine line between maintaining your composure and not trading and then missing opportunity. That's a balance you have to figure out. Got him, Trader J. Thank you, buddy. Nasdaq hasn't moved in 20 minutes. ES is creeping a little bit higher inch by inch. Where do you see the put call imbalance? Hero. So I use Spot Gamma. Spot Gamma is an option chain, which I am an affiliate of. They in the bottom left have the Hero indicator. It shows the put call skew, the flow. If you'd like to purchase Hero, there you go. I have a question for you. How are many of you, specifically, you choose not to buy Bookmap because it's easy to go view it online? If it wasn't available online, you would purchase the product. Some people think they don't even need it. That's fine. You don't need a lot of tools. But what I'm finding here is that the biggest holdback to getting people to sign up for Bookmap is the fact that you could just go look at it for free on 15,000 different YouTube streams. So I've been talking to them. I've been talking to the research team for them at least a year and a half now. But it's very, very difficult to get them to get YouTube to shut down those streams. Surely your analysis makes Bookmap valuable. Nice, Mojo. Thank you, buddy. I like Bookmap, but I wouldn't buy it. Too expensive, and free is a very good price. Yeah, free is a great price. If you make $200 or even $100 on 5 child accounts, that's $500,000 a day. Yep. If it's not on YouTube, it'd be on Twitch. If not on Twitch, it's going to be on Kick. People stream on Kick. Bookmap is delayed in these streams. No. I mean, only maybe 3 seconds, but not much. All right, top book on the S&P right here at the morning high. And the SR flip at 64.34. That's why, in my opinion, it's just very expensive for new traders, especially at $200 for pro data. Definitely, yeah. Yeah. Having it's way better than watching it. It is definitely way better, definitely. Kick pays people mad money to stream there. Really? Never even heard of it. $400 a day times 250 trading days a year is $100K a year before taxes. Yeah. Yep. And you'd be surprised how easily obtainable that is. But people don't want $400 a day. They want $10,000 a day. They want more. Man, this is boring, which we knew coming in here, but. Whew. 1 minute chart. Back and forth. Platinum, R2Y, gold. Gold's putting on a bit of a bear flag. Did you see my question? So this means they're buying calls and selling puts. No, that means they're buying. Right now they are buying calls and selling calls. Or, I'm sorry, buying calls and buying puts. They're buying both sides of the tape right now. But they bought all the calls back because we were in a heavy negative territory. Because they had sold 600 million of calls,
Now they're purchasing 450, so that's a billion delta in the calls purchased. But they're also still buying puts. So we have 1.4 billion in puts right now. So they're buying both sides of the tape right now. So the way that's unique about spot gamma and the way they present that is that they present it in delta notional. So if the put number is negative, that means they're buying puts because put is a negative delta product. If you go look on your option chain right now and you look at the puts, the deltas are negative. If you look at the calls, the deltas are positive. So if you're buying a bunch of puts, you're going to have a negative delta notional on your portfolio. And if you're buying calls, you're going to have a positive delta notional on notional. So if you have the calls positions going negative, that means they are selling calls. By the way, top wick right off of 64.34. While we're on the topic, in all honesty, how easy, hard do you think it's doable to do that and make a goal of $1,000 a day? I ask a lot of millennials who are making six figures nowadays, especially in tech and healthcare. They would like to replace their goal income. Is it easy? If it was easy, we'd all be millionaires, man. If it was easy, I wouldn't have a job of trying to teach this stuff because all y'all wouldn't need anything. It's not easy. So, is it possible? 100%. Every single one of you in here have the tools, the knowledge to do it. But it's up to you have to control the part that I can't teach, which is your emotional fortitude and your discipline. That's the part I can't teach. That's the part that demands experience. Is it possible with a $1,000 account? No. But if you've got a $300,000 account, it's very doable to bring in that kind of money a day. Whether or not you're selling premium or you're just taking small position sizing. Yeah, bottom like the crap out of it. Looks like it's some Canadian. Nope, that was 10 minutes ago. So that was not a news-driven headline, apparently. I mean, go look in the signals channel. Go look in the signals channel. I think only one signal that I've posted since the inception of that channel has not really played out. So if you would have taken just those trades or those setups, you would have made money. The problem is nobody wants to trade 20 times a month. They want to try to trade 20 times in a day. That's the hard part. When you start throwing in the human nature of gambling and greed and fear into trading, that's what makes it so difficult. But if you can just sip your coffee, sit here, and just become a sniper, gather your pattern of life on all these different names and just wait for these signals. Trading is not all that difficult. It's very, very simple, but we make it more difficult than it already is. And when you are wrong and those setups do in fact break down, you let the losses run because you can't stand the loss. You need it to come back. I've got DMs and Gmail messages from people who are very much underwater right now because they kept trying to short the top. And they just hold on to it. It's hard. It sucks. After a few years of full-time day trading, I consider 1% a day on per capital on the bottom of the range. 3 to 5% is typical for me, and I'm not special. There you go. See, Mojo can do it. Bottom weight. Liquidity 64.25. That was the first touch. So now we have a red candle out of nowhere, which you never want to chase. We know that. When you're in a tight price range, the first break out of the range you do not chase because they will bottom wick the crap out of it or top wick it, depending on which direction we're going, every time. So now we have a little feeler liquidity, red candle, that bottom wick. They filled it back down a little bit, and now we have remaining liquidity to 64.25 with 1.7 billion inputs. So I still think we're going to trickle on down to 64.25, maybe even lower. But that's throughout the whole session, not necessarily right now. So if this comes back up to 64.34 again, I'm going to look for a possible top wick and then enter short at that area. If someone can go to shares and not options and maybe buy 500,000 shares, maybe for 50 cents, sounds reasonable. But like I said, yeah. Plus, with stocks, you can actually use a lot more margin too. You can use margin. Back in 2021, 2022, I was putting on $800,000 trades. I was buying $800,000 to $900,000 worth of Amazon stock. to scalp, to day trade off of. But it was stocks, it was not options, because the risk is a lot less. You're not risking, 50% on an options trade. It's stocks. So you can do that stuff with stocks. You could take a little bit more risk, a little bit bigger piece of the pie with stocks. Highly recommend starting with stocks. Highly recommend starting with stocks. Shake it with me. I went short of 64.32 just after touch 64. Tight stop loss. Okay. I mean, that, yeah. You went short at 32. So that now it should be back to break even, right? So you wrote it down to 26. That is a decent little win on a day like today. $8,000 shares, dang, big baller. Well, that was using margin too, and it was only stocks. I posted the screenshots in here before. That was a fun day. $64.30 down to 25. We still have massive put buying here. 64.34. I might attempt me a short down to 64.25 here soon. I do better when I set alert for volume events and hide my charts and distract myself with something else until alerts trigger. Yeah, do it. By the way, $400 a day is a freaking dream. It is the dream. I thought I was doing something trying to aim for 1,000 shares. You have up my goals. I had a very good 2020. 2020 is what put me on the map, and I put that into a lot of Amazon. The proper path is penny biostocks, option stock futures. I 100% agree with that, but not in the way that you think. The proper path is to start out with biostocks so you can absolutely get clobbered, realize how dumb that is, learn from your mistakes, and then switch to proper trading. $64.31, we're putting on a bit of a bear flag here. 1.62 billion. 1.62 billion in puts. The wolves away. I think I'm about ready to sign up for 5 more accounts on Quan Tower. I think I'm ready to start doing this, especially now that I've been sitting here for almost 10 days without a funded account now. See if I can get on futures level up here. $400 a day per account times 5 times 5 times 20 times 250. Now we're talking. Accumulation phase? It's possible. It's possible. I am starving. If you don't lose 5 figures, do you really learn your lesson? No, you don't. You need to get your face beaten in before you know when to duck. I'm really not trying to make crazy money every day. I'm totally fine with $200 copy across 5 accounts. I get the benefits of doing it all the way, one contract at a time. Might need to switch to micros. I'm really dialing it in. 100%. So here's the thing, for me, I'm just trying to do 400. You pick whatever number is good for you. Even $50 a day, dude. $50 a day is still. If I were to walk up to you every day, knock on your door, ding dong, and I'm sitting there with a horse mask on, and I just hand you $50 every single day, I think everybody would be pretty stoked about that. And then if you have 5 of me, aka 5 accounts, handing you $50 each, for some reason you like that movie Multiplicity that was made in the 90s, 5 OMs with horse masks, and each one hands you $50. That's 5 accounts. Boom. Why not? That's fantastic money. Why the horse mask? I don't know. I just like the horse mask. Top wick, by the way, here. 64.25 looks like it wants to fill. We have a top wick with volume. Very slight volume, not much. Can we get the close? That's right. Come on, baby. I see this as the best way to manage trading. Probably too greedy, but watching 64.17 along. Nice. Emotionally manageable compared to a larger position size unless buffer is huge. Yep. Still holding 64.30. Very, very tight day. This is about as boring as it gets. Anyone copy trade with NinjaTrader? I might have to try out NinjaTrader because I hate Tradevate, and the only option I have is either NinjaTrader or Tradevate with a stupid live account. So unfortunately, I might have to do it. But if anyone has any tips on NinjaTrader, let me know. Right now, I'm just gonna. I don't even have my IBKR open. I probably won't even open my IBKR until Wednesday because this is just abysmal. I've got my stops on a couple of active trades I've got, and that is it. A little bit more red. What's up, Liquid? How you doing? Any thoughts on the old VIX? Yeah, it's getting wrecked. They are collapsing the volatility big time, and it's because there's no put buying. What are your thoughts on the removal of the day trading pattern rule? I think it's fantastic. Y'all know me, man. I'm a libertarian purist. I think if you're gonna let us trade, then let us trade. Why you try to control us, bro? So yeah, I think it's fantastic. Here's if you're gonna lose money, you're gonna lose money. Doesn't matter if it's 25K or 2K or nothing. Doesn't matter. So let the people who are gonna lose. Let the people who are gonna win, and just let us trade. Did they actually do it? I don't know if they actually did, but I know it was a discussion. What are the total fees associated with TPT account? Let's say you get a 50K, which is 170 a month. Well, first of all, if you use my code, you get 40% off that 170, and you get 0 fees for activation. So literally, that's all you pay. Is the initial fee to sign up is all you pay. That's one of the reasons I'm pushing this firm is because it's one of the lowest cost of entries. I think there's one maybe two out there that are cheaper, but the rules are terrible. So it's the lowest cost of entry, and you get daily payouts. Fantastic. And if you have a bad day and blow up your funded account, you can reset it, which I haven't had to utilize yet, but I wouldn't mind doing it as well. If I have a bad day and smoke one of my funded accounts after the amount of money I've taken out, I'll pay the couple $100 to reset it. It's going to save me the time of getting back inside of an eval. So if you haven't taken a payout, I wouldn't recommend doing that. If you have taken a number of payouts, then why not? Red candles, by the way, coming down. Here comes 64.25. Coming on down. Creeping down here. 64.25 is the target. I don't know about copy trading with Ninja, but what I did learn, I looked into, is complicated. There's a third-party service you had to buy just to be able to do it. Might have understood it correctly. Yeah. This is atrocious price action. What's NASDAQ doing? Even NASDAQ ain't moving. This is terrible. One thing that Spot Gamma talked about, which really scared me on Friday, is that they say everything they're seeing here looks like this market is heading into what they call a zombie market. No true buyers, no true sellers, just driven by positioning and the option chain, and it's going to cause the price action to go stale. Which means they said they're going to compare it to 2017, which scares the bejesus out of me. It scares me more than Nightmare on Elm Street or It. Because if you're able to find a chart that can go back to 5 minute time frame and go back and look at 2017, you're talking 2 to 3 point days, 4 point days on the S&P ranges, and 15, 10 points on NASDAQ. It's absolutely atrocious. It takes all day to move 3 points on a yes. It's a market that's nearly impossible to make money in, at least for this style of trading. So I hope that's not the case. That's what they were talking about in their founders' notes. This day would be amazing compared to a normal 2017 day. PD said to go to 2 count. Nice. When I buy another TPT, I'll use your code. Thanks, Liquid. Appreciate it, buddy. I bet you Mojo remembers. I'm finally going to join the prop game this week using your code. Appreciate it, Ethan. Thank you. Would it be Iron Condor season? Well, the problem is the premiums were so low, you can't get premium at all unless you're selling like right next to the money. You can't get a credit unless you're right against the money. So it's just very difficult. Whereas, now, or maybe a year ago, even still, you could play 20, 30, 40 points out of the money and still get a decent credit. Now you've got to be right up against the money to get any kind of credit when that happens. Am I reading from different chats? YouTube chat and this chat, yeah. Pepperidge Farm remembers. 2017 was 8 years ago. I think the electronic day trading access has grown significantly to the point there are more participants now. No, you're 100% right, and I hope that's the case, because things have changed drastically since 2017. We now have 0DT options. We have Wall Street bets with the millions and millions of investors that have infiltrated the market. We have prop firms now, so even though most prop firms don't really affect the market because they're simulated, but the few that are on live trades, hopefully, will change the book. At least a little bit. Man, this is terrible. I guess 2017 type of market, you have to get good at scanning for individual stock setups. Yeah, so that's when you have to expand your horizon. So you've got to use a scanner to use small names. So you might have to go into small caps, medium-sized cap, large caps, blue chips, and anything that triggers a signal, you're going to have to accept the opportunity. $1.9 billion almost in puts purchased. El Terrible. How do you read the 10, 25-minute volume spike on ES? Let's go to the 5-minute. Let's go to 1020. I mean, we have a high volume bottom wick at 64.27. So, yeah, higher volume. I mean, it's the highest volume candle of the day, not counting the open. So that tells me there's demand there. So, yeah. Probably do a quick liquidity grab higher before dropping. Who knows? Yeah, it is terrible. It's absolutely awful. We have so much opportunity this week, man. It's going to be a fun week. It's going to be a fun week. European trade deal was launched the market a month or two ago. Now we have this. Well, I mean, we have the headline exhaustion. We have the headline exhaustion there where things died out. And we had tremendous volatility, more than we've ever seen back in the spring. Now we've got price action for ants. Do you remember back when ES is putting on a 400-point day in a single day? Now it's a 4-point day. Let's go take a look at NASDAQ. NASDAQ has liquidity to 518 and up to 546, and a little down here to 507. Tesla jumps 3% with the Samsung chip deal. Rocket ships. It's super boring, yeah. I think I'm going to call it. I'm at work, so I can't really trade anyways with the price action. No bueno. Yeah. El Terrible, baby. El Terrible. NASDAQ just put on a decent top wick on the 5-minute. No volume, though. Slight uptick in volume. But this is just the day we're living in, man. Not much going on. Might make another pizza at lunch. Dude, that looks epic. Epic. Why are top ticks significant? Well, top wicks and bottom wicks are both significant. So it's telling you what the intent of the market is, what the intent of the price action is. And if you combine that with volume, you can determine support or demand, which is crucial for traders to determine where the price action is going to head. Really, all the market is, if you take all the crap, all the strategies, all the markers, all the indicators, and boil it all down, it all comes down to two things: support and resistance, period. Where's the market going to bounce? Where's the market going to reject? That's all we care about. And everything that we try to analyze is trying to figure out those two things. The easiest way to do that is to figure out, all right, where's the wick with volume? Can it start to make a move in the other direction? And then to really kind of spruce it up, you go back and look. Where is it historically bounced and rejected with volume? Because if you can find a key pivot where it's already bounced, that is where the market's going to shift. That's it. But the question is, can you be patient enough to wait for those setups? If you can answer yes to that question, then I can almost guarantee you can start making some money in this market. When I tell you the things I have seen running this community is atrocious, I mean it. It's heartbreaking to me to see some of y'all, what y'all have done. Not some of y'all, but a lot of y'all. Over the DMs of everyone who are people who are no longer here, people I've crossed paths with. It goes to show me that all the people that started trading here in the past 4 years have no idea what they're doing, and they don't know how to learn. They sit here at the chart, and they take 60 trades a day because they're trying to trade every single little candle. And I mean it. I'm not exaggerating. They're trying to trade every candle. They analyze every candle. They chase every candle. They get out of a trade, they immediately get right back inside of another trade. Immediately. The second they hit exit of a trade, they're already getting back in another trade. So, I mean, that's not trading. You're not a trader. That's not even gambling at that point. That's just, I don't know what you're doing. So the number one thing I could really offer you is less is more. Less is more. Plot high value pivots and only trade at those, and your trading will get way better. I can't guarantee it'll be profitable, but I can 100% guarantee it'll drastically improve. So for ES on a slow day like today, you waiting for a long at 64.08? Yes, but I'm not going to wait for this thing to go down to 64.08. With the liquidity we've got lower, if this thing starts to give me a 3 criteria top wick, I'll short it down to 64.08, and then I'll long it at 64.08, yeah. But 64.08 is a long way down. Long way down. Three criteria on the 15. I knew it. I use both of them, yeah. I use 5 in the 15. 15 is going to be larger moves. 5 is going to be shorter moves. Sometimes the 5 turns into the 15. Right now, I probably would trade on the 5 with this price action just because things are so slow. If you want to get a 15-minute criteria short on this, you'll probably need to wait till 25. 64.25 to get a short. Looking at today, we are short bias. Would you be looking to see a candle wick above resistance and close with volume? I mean, I guess I could say I'm temporarily short bias, but overall, I mean, if I get a move down into my liquidity, then I'm going to still look to buy the dip. So I'm careful to use those terms because I'm not looking to short this thing down to the ground, just down into where that liquidity is. And then I'll look to buy the dip once again. But still, I mean, this price action is so tight. There's not much here. Like, why am I going to waste time and energy trying to short or trying to play this crap when there's not much going on here? Like, I want to set myself up for success trading high probable moves. This price action in half a breath can be at 64.40 before we even know it because volume is so light. So, once I get a sign, I'll put on something. But here, whatever, man. We got a lot going on this week. What do I think about United Healthcare? Man, it's down and down and down. That's called impulse control. Yeah. Total cost. ES ticks are compressing. Yeah, they are. Red candles. $64.25 is the main liquidity here. Coming down. NASDAQ, nice little top wick to move lower. $64.26. Nice move lower. RTY is holding. Platinum, nothing else is moving. Gold is still coming down. Nice little bounce off that sweep from the settlement low there, 3,300. NASDAQ is slowly tricking lower here, but we have 2.1 billion in puts and 240 million of sold calls. So the 0 DTE chain looks low, looks bearish right now. We have 2 billion in puts purchased. 64.25 liquidity lower. Thinking it may need to be the bottom on UNH. I'll have to look at it. You need some soft music. I never know if my sound is working until you talk. Yeah, I do need some soft music. I do need some soft music. Market net flow on TT looks gross. Yeah. Yeah, it's very gross. Plus we have a mixed market here. The S&Ps on the X's are red and green. Right here. Top wick. $23.47. Apple's the next buyout. IoT is the next Apple buyout. Oh, okay. NASDAQ is still creeping lower here. This is the spot where NASDAQ has bounced, what, 5 times now? So this is the area where they have to shift through. Anybody watch Happy Gilmore 2? What do you think if you have? Trash? Terrible? Yeah. It's absolutely awful. One of the worst movies I've ever seen, which is disappointing. It's hard to it is hard to take it seriously. That's a legacy movie. Happy Gilmore is like one of those movies everyone knows. It's fantastic. And he absolutely ruined it, whatever the crap this was. It looked like it was written by 10-year-olds. Like a big joke. There's comedy, there's funny, and then there's a joke. And that was a joke. It's terrible. It brought a lot of people back and gave memory to those passed on. I thought it was nice at least. I mean, yeah, the cameos were fun. Even if it was only temporary, but it was terrible. So the ES 1 hour, if it closes below the previous candle, even though it's in the pre-market, would that be equal 3 criteria? So the 1 hour chart. Okay, let's go look. All right. If it closes below the previous candle, the close, not the wick, even though it's in the pre-market, yeah, 100%. So right now, for example, we've got technically on the hourly a 3 criteria move lower. Large red candles, top wick right here, and we're getting below the prior candle. So yes, that's true. It's just very slow. But again, you have to place your trades in a probability in an arena that's high probability. And this right now is just slow. Thank you. Anchorman. One comment I summarized imperfectly. It's a great example of why there hasn't been a good comedy movie in a long time. Yeah. Yeah. Oh, yeah. We also grew up, in the best years ever in comedy. The early 2000s. You couldn't miss, man. Wedding Crashers, Old School, fantastic movies. Anchorman, Tropic Thunder, yeah, just classics, man. Can't do that nowadays. How do you hedge against a large correction? Well, there's a number of different ways. You could do put credit spreads. You could do puts. You could short calls. Or you could rotate funds into bonds, which right now I'm beginning to rotate money into. Well, not rotate's the wrong word. I'm starting to place money into bonds. I haven't rotated yet. I'm starting to place funds into the bonds. Still going lower. All right, so we had a little green here on the ES and NASDAQ, and they both shifted lower. So ES is about to test low of the day. NASDAQ is a little higher. Get that hourly support. Do it. $2.1 billion. No, hold on. That's my screenshot. Yeah, still 2.1 billion in puts, 193 million calls. Creeping. So not only this whole range of 64.26 or so, we have the gap fill from the overnight sesh, and we have, of course, the morning low, 64.24 to be exact. We also have Bookmap liquidity at 64.24. Oddly enough, we have a very green CVD, 2287 green. So, you know, not the greatest cross currents, or not the greatest signals here. A lot of cross currents. Somebody just sold $9 million worth of SPX puts. Yeah, that's why I don't track unusual whales, because you don't know what that is. Could be some sort of hedge, which most likely is. I'm starting to appreciate the 80s more, even though I was only born in 88. Oh, heck yeah, man. Heck yeah. 80s was fantastic. Not to brag, but I'm crushing on Command and Conquer Kane's Wrath. I've never played Kane's Wrath. Is it good? I've tried out. Oh, man. CL still coming down. Gold. Nothing's moving. Boring stream today, people. I apologize. I apologize. This is just boring. TLT is 86. Speaking of TLT. Bonds haven't moved at all in freaking months. Terrible. The yields have seemed to have stabilized to some degree. They're not rocketing anymore. I have to laugh every time I see this chart. This is ridiculous. Look at this daily chart. It's terrible. Nasdaq's even worse. A little bit more red, 64.26. Just a tap tick. Liquidity is 64.25. Do we have that still? Cat way still down south. I haven't even looked. Yeah, even more actually. Jeez Louise. 52.50. 52.50 seems so improbable now. It's crazy, but that's when it likely happens. Any noticeable difference in tracking ES on TradingView from Capcom versus CME? I do notice that TradingView is just a tick behind, but you only really notice it when things get pretty volatile. If you look at IBKR, let's say if you're in a short-dated option on IBKR, it becomes very noticeable because your premiums will start to move on your option before the move is made on TradingView. I mean, just a second before. So in the event that you're in a call and the market starts to move up, my premium will start to go much more profitable about a second and a half before TradingView does. Other than that, not much difference. What do you think of the Dow as a long-term ad? They cut dividends, but geez. I don't really know what to think of long-term in this market. I have no idea. I've never seen anything like this. Nobody has. So, I don't know. Oh, what do you think of the Dow stock? Oh, my bad. You know, I mean, I don't know. It's cheap. What's the dividend on it? Pays 35 cents a dividend. The dividend is not terrible. Um, I don't like buying stuff though when it's at all-time lows. There's a reason why it's at all-time lows. I just don't like it. Stuff like that. I've never really looked at it. I'd have to take a peek at it. Oh man. 2.23 billion in puts, 225 million in sold calls. I just think we're biding time before 20. Look, they're even adding to 64.25, so I'll probably say there's a good chance we fill that. I don't know what's going to happen before then, but good spot to buy the dip. I'd probably say after we fill that liquidity, yeah, I would look to bottom wicket. Now we do have liquidity down to 64.10, but without volume, I don't see us getting down to 64.10. I mean, this is just as slow as it can get. This is ridiculous. Liquidity down to 64.25. They're adding to it, so I'd say we're going to break through that. Granted, it's only 1 point down, so I mean, whatever. But yeah. CL right now is trending lower. We have this first pivot from the big liquidity sweep at 9 o'clock. So if that gives out, then yeah, you could play down to 66.03. But it might be a little good bounce point right here. Maybe a scalp long for a couple of points. This is where the imbalance kicked off on Friday. So it trended, it chopped sideways, and then rejected this area, dropped, bounced, came back up, and here we are. So What's NASDAQ got? I'll have to start telling some dad jokes here pretty soon if this keeps up. Here comes 64.25 maybe. Maybe. 64.25. Can we do it? Here we go. I think it's about to do it. They're grinding up against it. Like bump and grind. So light. This is terrible. Eating into it. Got to zoom in far for this one. It's so slow. They're adding a little bit at 20. Coming down to 64.24. There we go. There we go. We got another point or so until 64.21. But there you go. Here you go. Yeah. Well, you wise guy. Beautiful. Finally. All right. Yeah. There we go. Finally. All those puts, we finally touched it on lower. It's about time. New low of the day. May I ask, what type of stop loss did you use for the 8,000 shares? Can you tell me in dollars and cents versus percentage? I catch on easier that way. When I was taking those trades, I was playing off of quick bounces and quick rejections. So it wasn't necessarily looking for dollar amounts. It was about structure. When you're taking that trade, it's got to be structured. Now, granted, I wasn't, it sounds like, yeah, it's obviously, it's a lot of money to talk about, but when the amount I was risking for the amount of movement I was expecting in Amazon wasn't crazy. Look, still coming down here. Fantastic. Fantastic. Have I tried quant data? Is it similar to spot cap? I have not tried that, no. Still going down. Beautiful. Still going down. Look, all the puts. Puts just rocketed too. Look at that. 2.9 billion in puts. So the puts are just still pumping into it right here. We just took out the 64.25. That was the target. Now they could go down to 10. They're adding to 10. If you look at 64.10. Coming on down. Beautiful. Beautiful. Fantastic. Now, what do we say? We talked about it this morning. You feel the 64.25, now you buy the dip. Short bias until 64.25, now you buy the dip. We could go down to 64.10. We may actually go down there this afternoon, but with this amount of liquidity, you got to expect a bounce opportunity when you first break out. It's just very slow. Good song. Delicious. Do you think a 30-cent stop loss would be too tight for NVIDIA SPY using shares? I mean, it depends on a lot of factors. I don't think that'd be too tight, no. But it depends on how much you're investing. It depends on where you're buying and selling. That kind of thing. I don't think 30 cents is too tight at all. Or is too large at all, no. All right, bottom wick right off of it with volume. So there you go. Fantastic. Took a while, but thesis plays out. Don't have a lot of money. Buy the dip, baby. Yeah. Yeah. Nasdaq bottom wick the crap out of that candle. Heck yeah, man. Heck yeah. With volume, too. So the 64.25 was the first target for the yes, and they smoked it. Coming on down, and now they're bottom wicking it. So like I said, temporary short bias till 64.25, and then you go back to buy the dip. Period. Every time, buy the dip. Every time, buy the dip. It's going to happen. Buy the dip. Coming up on the end of the stream. If you have any questions, let me know. DM'd you a new question yesterday. Hope we get some feedback. I'll take a look. I still have not received a reply to my DM question. What you got? I've got a lot of DMs, dude. So forgive me, but I'll try to get to it. Harness energy block bats, right? This was a good long entry, 100%. Where would you set your stop loss? For me right now, your conservative stop loss would be 64.21. Your aggressive stop loss would be 64.18 or so, 17. And then, of course, if you want to go full aggression, under the low of the day would be the best because that's going to keep you safe. Just use the structure of the market in the 5-minute. Now, if this was more volatile, more high volume, then I would be a little bit wider with that. But right now, I mean, we're dealing with, I mean, even as amazing as that drop looked, it was still only like 10 points. We're not talking about a lot here. Yeah, definitely share it with the group. Did they reduce puts with that drop? Just slightly. They went from 3.1 billion to 2.8 billion. Only slightly. And they're still short calls 330 million. I'm working on this indicator. Been messing around with Claude for help. I don't know what Claude is. Based on volume increase and time frame assigned, going back to stochastic and POC for the criteria tonight, see how it turns out. Give the signal before the drop. Nice. Very cool. Anything that helps. Sounds like an AI. So we have a high volume bottom wick right off of our target. And now they're back to 64.25. So now we've had one SR flip fail. We talked about it this morning. Now we're coming on down. Here we have another SR flip, which is the morning low. So the testing of the 64.24 is your indication for future movement into the afternoon. We still have 64.10 liquidity on the south, and we have 64.35. Your trigger to go for 64.35 is to recapture the morning low, which right now on the S&P is 64.24. If they reject that, you could play the two different environments if they reject the morning low. You could play the double bounce, which means they drop back over and then bounce it, or you could play the trend down to 64.10. That's up to you. Results below. Claude's AI for coding. Fun to mess around with this stuff. Nice. A lot of the stuff that you learn in the markets too for trading, it's more than what I can teach. Like I know everyone's asking a lot of questions about this and that, and that's great. But you also have to realize within a low volume environment, when the market goes from tight, constricted price action to an aggressive move, you cannot chase it. They are going to at least bottom wicket or top wicket, depending on which direction, at least once. So here, and not to mention now we've got targets. Bookmap gave us the target, 64.25. They blew through that. And then bottom wick, and here we are right back to it. So as long as you don't chase and you make sound decisions, you can eradicate a lot of dumb losses, dumb entries. But it's understanding the concept of order flow. Can you repeat that and walk away from about using SR? Yeah, so if you look on the book, I've had the Bookmap stream on Discord the whole time. I'm surprised y'all don't say nothing. Change stream. All right, so if you look on the Discord stream right now, and the YouTube for that matter, these red lines right here are the morning high. I'm going to mute the volume profile for a second so you can know what I'm saying. This is the morning high and the morning low of the S&P. So this morning, we already had an SR flip right here. Prior support, breakdown, new resistance. We already rejected that. That's an early entry for people who want to take a little earlier entry. That's great. Now we have the morning low. So the morning low is this red candle at 64.24. We have 2 points of liquidity on the order book, 64.35, 64.10. Now 64.10 is larger, so the skew right now is still 64.10. Your indication to play back long for a V recovery to 64.34 needs to be reclaiming of the morning high, or I'm sorry, the morning low, and holding it. If they reject this back down, you have two environments to play, two theses to play. You could play a double bounce, which means it comes back over, bounces, and then goes higher, or a rejection and then play down to 64.10. That's it. So if they reclaim the morning low and hold it, which it looks like they're trying to do at the moment, then you have to be very careful playing additional downside, at least currently, because this morning low is the main pivot in the market this morning. As a beginner, should I focus on learning chart patterns, volume, or order flow to build my edge and plan entries and exits? You need to look at volume first. Forget about indicators, forget about chart patterns, forget about EMAs, forget about it all. You need to learn price action in volume first. I feel a bit scattered trying to learn everything at once. I've read Anna Collins' book twice and want to start getting reps in as far as overviews. So the number one thing I can recommend. One, I'm about to release another YouTube video. I would recommend going watch the prior two I've posted. But I'm about to post another one about the 3 criteria. If you want to learn trading, first you have to know what to look for. So, the only thing I can truly recommend is to learn the market itself, which is price action in volume. Learn to identify where the market wants to bounce, where the market wants to reject. Period. That's what everything boils down to. And you do that through the process of volume discovery and price action. The market auction theory, which is Wyckoff, Jesse Livermore, Richard Ney, Anna Colling, all these people are auction purists. So once you identify that, you don't need any of the other crap. Everything else is just, the cherry on top of the cake once you have the cake. And I'm not saying it's going to help you identify every single move, because nothing is going to help you do that. But it will help you identify the major pivots. That's it. It's going to help you trade less, because you have to realize that as a beginner, I want you trading no more than 10 times a week at the absolute most. If you're taking more than 10 trades a week as a beginner, you're wrong. I would say no more than 5 trades a week to be on the safe side, if not less. So try to work on sitting your butt down in the chairs Monday through Friday and taking 3 trades in a week, high quality pivots, and that's it. Forget about the scalping back and forth. The shorter time frames you go, the higher the amount of trades you take, the higher probability for losses, because the market is inherently unpredictable on the 5-minute. There's a lot that happens in the 5-minute that nobody can explain. I can't explain, because it's inherently random. Now you can understand conceptually what the market's doing through the process of liquidity sweeps and runs and all this stuff, and that's great. And understanding the mechanics, because sometimes I can tell when the market's going to break out simply because I know that the average person is trying to short at a level, so I know the market's going to breach and go higher. So there's stuff like that takes experience, but that's not every trade, and that's not the easy stuff to teach. The easy stuff to teach is, all right, they're going to drop the market until they hit this monthly low. You're going to see high volume come in, and that's the time to long, period. And then you take that long, you set your stop loss, and you take your hands off. And whatever happens at that point. And if you do that consistently, once, twice, 3, 4 times a quarter, you're going to catch a massive trend. And that's all you need. That's the number one way to trade, is that you literally, Sunday night, to start the week off, in the mornings before the market opens, open up a chart, TradingView, whatever charting software you're using, open up a fresh, clean chart with nothing on it, not a single indicator except for volume at the bottom. This green and this stuff down here at the bottom. Go to the daily chart and just look back. If you don't like the S&P trading at new all-time highs, that's fine. Go to gold, go to silver, go to platinum, go to oil, go to hog futures, and just look for major pivots, major rejections, major bounces with volume, and plot those levels. And you only trade at those levels. That's it. And then you can extrapolate that from the daily down to the 15, down to the 5-minute, and say, all right, well, if this market plummets right now, the S&P, where do you think I'm going to try to play long at? If this turns into a strong downtrend, where do you think I'm going to play a bottom wick at? Where can I guarantee the market's going to bottom wick at least once on this chart right here? Who can tell me? It's not rocket surgery. All right, y'all are taking too long, so I'm going to go ahead and answer it for you. Right here. I can guarantee you with 97% confidence the S&P will bounce on this red block at least one time. I don't know how far, but I can guarantee you they are going to bounce at that level at least once. So when the trend starts to sell off, I'm not saying don't short. You could short down to that area. But when we start getting close to the 6,400, the average retail trader will see massive red candles and be like, holy crap, I need to short this. I need to jump on. I need to make money. And then what happens? They short here at 6,403. They get about a point or two of profit, and then they get slammed in the face with a massive bottom wick. Whereas instead, you need to be getting out of shorts and getting into longs at the 6,400. plus or minus a couple of points. It could come down to 63.96 as a liquidity sweep. It could come up and bounce at 64.02. Somewhere in this block, I can guarantee you they're going to bounce it at least once. So you take a long, you roll your stop loss off, you take your hands off, whatever happens. Sometimes, you're going to catch this move and you're going to make a couple of 100 points. Sometimes you're going to catch, 5 points on a stop loss, or sometimes you're going to lose and it's going to keep on going. But if you apply this strategy repeatedly and consistently, I can guarantee you your hit rate will go up, your R&R will increase, and your high quality trades will increase. And your frequency of trades will go down, which is important. Now the hard part is doing nothing until you hit these levels. You have to sit there and watch price action shake and bake until you hit these levels. And that's the problem. Most people can't do that. So they end up getting destroyed when they can just wait for these high volume pivots. If you can do that, I can guarantee your trading will go way up and you'll actually feel like a real trader. You're still going to take losses. You're still going to have some struggles, but you're going to start feeling like a real trader because you're going to have something tangible on which to make decisions. Right now, you don't know anything. You don't know what you're doing. So you can't really grasp stuff. There's a lot of engineers and I guess, which brain is it? Right side, left brain? I don't know. Is left side creative, right side engineering? I don't know. Whichever the engineering side brain is, these people come in here and they want something tangible on which to gauge their system, something tangible to fix, to correct, to adjust. And unfortunately, most people don't even have that tangibleness. They don't know what to fix because it's fugazi. They don't know what they're doing. So if you can do something like this, not only will it obviously make your trading better, but it'll feed that part of your brain that needs to fix something, the analytical, structural part of your brain, especially for someone who's an intellectual like that. It'll check that box. It'll make you appreciate the system, and then you'll become addicted to process, not profits, which that itself is huge. And then you'll be able to sit here and do nothing when the market's not moving. By the way, we are now back to positive delta on calls. They went from negative 650 million to positive 350 million. That's where I play video games on another monitor. There you go. Yeah, do it. Go do fitness. Go play video games. Go make lunch, whatever. When you plot those levels, say it's a bottom wick. Do you plot from the bottom of the wick? I do. Yeah. Because you have to figure out where the volume comes in at with wicks. Now, the thing is, this is just a 5-minute chart. This isn't even a massive level. It's 6,400, so that's a 0-0 psychological level for the markets. The markets love the 0-0 levels. We have a 5-minute chart where we bounced off of repeatedly since Thursday, July 24th, but it's not a massive macro level. It's not a massive level for the big dogs. Now, I personally have a tier 2 level around this area because that's all we have. We're up at all-time highs. But if we were down at like 5,800 or something, I wouldn't have a macro level here because there's not enough data. But as it is, new all-time highs, that's all I've got. There's a whole bunch of liquidity in this area because we've got 2 days of structure built into this area. So from here, we've got to get through the 6,400 if we want lower, down to 63.56. It's a very crucial area. So all I'm saying is that with this area, when we start to come back down, don't go chasing shorts into supports. Don't be the jabroni retail trader, and you're going to have they're going to set the hook in your mouth before you have an opportunity to make any money. Why do you think traders have an uncanny ability to short the exact low price and long the exact high price? Because they're chasing. Reactive trading. So yeah. For those trades, how do you set targets or take profits? How do you know where to hold and where you shouldn't hold the position? That's a great question. So, let's talk about when you're wrong. It's great to talk about when you're right. So let's say we take a long here at 6,400. In my opinion, the stop loss should be somewhere in this block, depending on how aggressive you want to be. I'd like to risk about 7 to 10 points on scalps for the S&P because that usually gives me enough chance to be right. Sometimes I'm going to get stopped out. Most of the time I'm not with my win rate. My win rate sits anywhere between 70 to 82% on a normal session. So in that block, I want to set my target based on structure. So if it breaks out this level, I want to get out of the trade because that tells me that's too much. Now, obviously, I want to set my entry point as low as I can based on liquidity. So if I'm not feeling as aggressive, or if I want to be very safe, I will set my entry point down under 6,400, like 6,396. And I may miss the entry, but it's going to keep me safe. And that'll allow me to take a little bit more risk and set my stop loss even lower. Because anything beyond these pivots, you're risking a waterfall, and you're going to risk getting blown out. So you have to set a stop. You have to set a stop. I mean, every trade should have a stop. I mean, that should go without saying. There should be nothing where you're gonna white knuckle it. And if you don't believe me, like I said, I've got some DMs I could show you. I would never show you, but I could if I was a mean person. So for any possible downside to that 6410 liquidity, we want to wait for the 3 criteria setup. Not concerned with major pivots right now, except for the macro R1. Well, if you want to get down to 6410 after that little quick bounce, then yeah, you want 3 criteria: top wick with volume. Now we are entering in the afternoon session, so in my opinion, next part of the conversation, obviously you need to have time constraints on your system. My trading becomes aggressively unprofitable after about 11 o'clock, and it doesn't pick back up again until roughly 1 p.m. Central, 2 p.m. Eastern Time, roughly. So I know it is not in my best interest to sit here and trade. Even on the days that I do trade and do well, it doesn't make up for the consistent losses in that time frame. So in my opinion, I don't trade in this time frame. I'll sit here and chat with y'all. Most of the time, though, I'm either doing fitness, making lunch, or making content. That's it. I don't trade in this time frame. Right now, the hero says 2.7 billion in puts, 376 million in calls. You're doing a fitness. That's right. I've been finally I'm programming CrossFit workouts for the kids because they're finally old enough where they can do that. We started 4 weeks ago, and yesterday I introduced them to lunges. So yeah, my butt cheeks are super sore. If you ever done a lot of lunges, your butt cheeks get smoked. Your legs, your quads, your hamstrings, and yeah, posterior chain, baby. How old are they? The youngest one is 10, and the second oldest one is 11. And then my oldest is 15, although he thinks he's 25. My butt cheeks are sore. They are very sore. If you've done lunges, you know what I'm talking about. Working Gabagoo, that's right. Split squats, yeah, they're fantastic too. If you've never done lunges, get out, yeah. Guess the answer to the above question would be if it's off levels. What's your question? Sorry, I was talking about butt cheeks. Where are you at? Here we go. I need to work on liquidity on Bookmap. I keep going the opposite direction of liquidity, which is the mindset of a bounce off of it. I went long at 64.25. Luckily, we had the bounce at the bottom for me to get out of the green slightly. I know you explained before, but you tell me how you know if it's going to reject or blast through it. Okay, so my first answer with Bookmap is skew. Is you have to identify the skew. And today the skew was lower. That's why my thesis was short-term bearishness of 64.25, and then after that look to buy the dip. So the way I play these trades is if you find a big skew, which they had at 64.25, the price action came down to it, and then they grinded against it. So if you go back and look on Bookmap, Let's go back and look. So if there's a major skew, I'm not playing the bounce off these levels. So this thing comes down here, and look what happens at 9:53 Eastern Time, 25 seconds. So what happens is the price action comes down to 64.27, and then it sticks here. It doesn't bounce. It just grinds, and then it blows through it. In addition, you see the liquidity itself start to build. As we get down here, it starts to get bigger, more robust. Here, 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 and here. It starts to get even more robust, and then it blasts through. So, oh, crap. I need to I tried to do the virtual camera, by the way. It doesn't work. Doesn't work. Bookmap. Thanks, Mojo. So right here, if you look on Bookmap, we're going to do this again. This is what I want to see right here for a breach. And you don't play long off to this until after the transaction goes through. So you're not looking, these aren't counter units. This is liquidity. The market has to eat that liquidity like Pac-Man in the game. So first you have to identify the skew, which at this point, obviously, the skew is 64.25. The big dog level is 64.25, and they begin to add to it at about 9:21. You see them. There's a little add. They're starting to get more, and it gets even more right here. It starts to get darker, which means they're adding more levels. So that's obviously where the liquidity is in the book. Price action falls down to it, and now it sticks. Right here at 9:53, it sticks there, and it doesn't bounce. When that happens, that's a great opportunity to take a short. A scalp short. So this type of transaction here, I frequently use this as if I want to capture 5 to 6 points on ES on a quick scalp, I'll take the trade. They'll come down here, stick to the level, grind against it, blast through, and that's the extent of the scalp. Now this is not something I usually do often, but if I want to take, if this situation arises and I want to take a short scalp, this is how I'll do it. And it'll net you 5, 6 points, in this case 10 points. Blast right on through, and then we bottom wick after we clear all of the liquidity. But I use these levels as magnets because that's the liquidity. The market's going to seek out liquidity. The absorption indicator messed me up sometimes. Yeah, I don't use it. Everything I've tried, almost all the indicators on Bookmap that I've found, and there's not much value add except for icebergs and stop losses. Even the stop losses don't do all that much. What's the yellow line? That is the volume the POC for the session volume profile. Still going. Bottom wick. All right, I'm going to call that a morning. Any questions? Any final questions? It's good stuff, though. I appreciate the questions. Good stuff. The good thing about today, a session like today, is that the price action is so tight, you're not risking a lot of money here. We're talking 10 to 15 points here. We're not talking about huge moves. So, you're not risking all that much. But massive bottom wick with volume. That's a confirmed move. We have now, even on the 15-minute, we have a 3 criteria meet. And after that, we can go for 34. So we claim the overnight low. We have 64.30, 64.35 liquidity. They're selling puts, buying calls. So most likely, we're going to retrace to 64.34. We have a 3 criteria hit here. So if you are long, I would set your stop somewhere 64.24. If not that, 64.22, take your hands off and see what happens. Good stuff. Are these live channels available after the stream? They are. Yeah. When you pull your nose hair out and your eyes water? It's terrible. All right, y'all. If you have any questions, hit me up. Let me know. Shoot me a DM. If you have a question about trading, I would prefer you put them in the channel, unless it's something like personal money amount that you don't want everyone to know. That's fine. I'll try to get to it, but just bear with me. I have a lot of DMs and not a lot of time. So Other than that, I will see you all bright and early tomorrow morning for another fantastic stream. Other than that, y'all be safe. We have a great week coming up, so yeah, it's going to be fun. Love you. I'm out. See ya.